What is up, my cash cleaners? How's that week? Hope you got paid. Hope you're ready to reinvest it, make some more money, because you know that's what we do here. Even in these times of panic, we still find a way to make a buck. And speaking of that, we all know things recently have been a little wild with the health of our president. And you know who capitalized on that opportunity? Trump's longtime friend and CEO of Regeneron. I can tell you right now, no one was happier that Trump got COVID than his butt buddy. And we all know I'm not talking about Melania because she's the last person to give him butt recently. His boy at Regeneron was put in the greatest position possibly of any healthcare company to be giving their trial vaccine to the President of the United States of America. Yeah, I think you know where things went there. Regeneron shares jumped up 4% just in the after hours. That is the marketing they need to make themselves the brand of the COVID vaccine. And we all know at a certain point it becomes a branding game. There's 6 vaccines in phase 3 testing right now in America. That means that we're getting the vaccine no matter what. It's not going to be one unsolvable riddle that only one team of scientists can figure out. So Moderna and Regeneron getting ahead of the play, getting ahead of the marketing campaign, because that's doing itself at this point. If they save the President of the United States, they save America. And saving America ain't free. Once Trump gets back to health, expect them to try and roll out their medicine almost immediately, get ahead of the 2021 cycle where they expect majority of the vaccines to be released. Because they know if you aren't first, you're last. Whether that's injecting yourself in the market or the president's bloodstream. And that vaccine had the president feeling himself. Injected a little bit of confidence into him. Because the day after leaving the hospital, he already is back at it going to war with the Democrats, saying no stimulus for the market, which resulted in the Dow dropping 500 points practically immediately. Literally, if you went to get coffee yesterday, you might have come back to a negative balance and a pink slip. Of course, Trump pussy out immediately, coming back the next day, saying he's waiting on the Democrats to approve these things because he views these are the most important things and everything else could wait. This story is important because whether or not we like it, the market needs stimulus. People are running out of money and they're the ones who are buying the iPhones that are coming out this Christmas. They're the ones who are going crazy on Amazon Prime Day, not the millionaire who has 7 cars. Chances are he has everything. He has everything he wants. He has everything he's ever wanted. He has everything he's ever going to want, except happiness. This stimulus is about the people who need it. And we all know who that is. The guy on the couch watching Netflix. Because they are the people driving this stock market rally up. Because all they know how to do is spend. And all the market knows how to do is take. So it's a win-win relationship. All right, let's get into some serious big dick news. So, Caesars Casinos is buying William Hill, an online sports betting company, for $3.7 billion. Sorry, I think a little came out when I said that. But they bought him for $3.7 billion. They see the future's digital. Online sports betting is hot. DraftKings is hot. FanDuel is hot. Bovada is hot. That's the one for everyone who needs to travel on the ground because their states are stuck in the fucking 1920s past of if we can't tax it, we don't want it. Especially due to this pandemic, people have been betting on everything just for entertainment. They're not even trying to win money at this point. They're just trying to feel alive. And that's good for these companies. That's good for this industry to get money flowing. And that's good for the stock price too. So expect these casinos that move into the online platforms and online revenue streams to grow significantly in the years to come. And I would be a buyer of them, personally. So JP Morgan is getting the hammer brought down on them. They got fined $920 million for manipulating energy and metal markets. So 3 traders were charged in September, accused of spoofing and flooding the markets of fake orders they have no plan of executing, bringing the stock price up and obviously cashing out. Took place over years, tens of thousands of transactions through 3 offices, New York, London, Singapore, and no one cares because the stock was up 2% the day after this story dropped. Because everyone knows you can't outshaft JP Morgan because they got the biggest one. A $920 million fine seems like a lot, but no one knows how much they made from these illegal transactions. And banking is a billion-dollar industry. So if you made at least $1 billion, you broke even. Chances are they made more. You don't get in trouble for manipulating markets if you ain't making some cheddar. And this just attests to the resilience of the company and why they are a strong long-term investment. They're considered by many the best in banking. And if you're taking hits like this on the chin and walking away with more money in your pocket than before, then who's gonna knock you out? Moving on to Boeing, what a sad story for the year they've been. Things are looking better, slightly. FAA administrator took the 737 MAX on 2-hour flight tests. This is all in the process to get the plane recertified for flight. They have endless amounts of employee parking lots now filled with these undelivered 737 MAXs that technically the buyers still want. Many of these buyers still want to fly and operate this airplane because of the energy efficiency. But it's not sounding that much better because even after taking these aircrafts on a 2-hour flight test, the administrator said he likes what he's seen, but no decision yet. And that just indicates that if the plane's not ready, then they're going to make this a long process. Either way, it hurts the pockets. And they're not doing that well outside of this. There's been negative 932 plane orders year to date. This is their first year ever of negative plane orders. This is their first year ever of public brand scrutiny. And it's going to take a real visionary to pull them out from this. Whether or not it's their current CEO, we'll see. But I would definitely put them on the pause list until we see greatness from them again. This is a company you'll rather buy late than early. So thank God the last great American company hasn't filed for bankruptcy yet. And we all know I'm talking about that Bed Bath & Beyond, where your boy gets his candles. So their stock rose up 32% on October 1st, up $5 a share. Their earnings were released. While same-store sales were down 12%, digital sales were up 89%. And that's what got investors happy. No one cares about how well you're doing same store. At this point, it's a write-off. Same store sales are a write-off the same way that Amazon uses its whole marketplace as a write-off for AWS. This shows that their brand is strong. It survived the COVID plague. Businesses went through their own COVID plague, and a lot of strong brands stood out, and Bed Bath & Beyond was one of them. It's been a great time for Bed Bath & Beyond and all these other publicly traded companies. A lot of money is flowing in. But another sector where money is flowing in an alarming amount, and by alarm, I mean green alarm, because business is booming. Booming for who, you may ask? SPACs. Listen to what I said carefully. SPACs. Not, I'm not even going to go there. But SPACs are special purpose acquisition companies. SPACs present companies that want to file for an IPO, an alternative option. They're pretty much blank check companies, venture capitalist companies. How much do you need? How much were you willing to sell? We'll cut it. You keep more percentage. You keep more freedom. And we roll from here. And SPACs have been growing. SPACs went from $10 billion in investments from 46 groups in 2018 to $13 billion in investments from 59 groups in 2019. And it's only going up. Popular company that's advertising every podcast, except this one, is for Hims. Technically, it's Hims and Hers is the corporate identity name, but you know what I mean, the place where you get your hair cream from. For Hims CEO talked about the possibility of going IPO, but they liked the ability to stay private and maintain their equity while also getting the funding they need to be creative. And I don't blame them. The one thing that people gloss over a lot about IPOs is you have a responsibility to your shareholders. And once you open up your shareholders to the entire country and or the world, you have an obligation to make decisions best benefiting them, which may in turn negatively affect you personally as the corporate leading CEO. Because technically every penny they make, you lose. And that's rough. And I expect a lot more companies and a lot more of these startups with these small executive board staffs who came with them from the beginning, who want to cash out, but don't want to be Zuckerberg, who goes to court maybe every year for another antitrust hearing. They might start cashing out to the private companies who will let them do their thing without the fears of getting canceled by Gavin Newsom. All right, let's get into that news feed. You already know what section this is. When the fuck did that happen news? I don't know about anything that doesn't affect my bottom line, but these things have potential to. So let's dig into them. Oracle and Google are in court today. Oracle claims Google is violating copyrights against aspects of the Java code in Android phones. Google argues that this is some basic bitch code and isn't protected by any law. First, they went to federal court where they sided with Oracle. And this is costly because Oracle is initially asking for $9 billion. Now they're going to the Supreme Court for another hearing. If, because Ruth Bader Ginsburg is no longer with us, making the Supreme Court 8 people, if they vote 4-4, dead draw, then the federal court ruling is enforced. And they initially asked for $9 billion. But if it is proven that they are stealing code, chances are they could reap way more than that. They could double down on what they're asking for after they caught them red-handed, try and pull up how this code has led to this many sales of Androids because of the technology that they advertise on whatever. It could get a little costly for them alphabet boys. They're going to be missing that U, that S, and that D because Oracle is coming to take that D. And by D, I think I mean dollars. All right, this story's for all my car fans looking to make a little money to buy a new car by betting on new cars. And Porsche Taycan has become the car you bet on. The Porsche Taycan, which is their all-electric sedan, became the company's top-selling non-SUV in America in the third quarter. They sold 1,800 plus Taycans between July and September alone. US accounts for 22% of Porsche's total sales. The Macan and the Cayenne are by far the leading sellers. But the electrical car that they developed to kind of rival Tesla as a Hail Mary might have been caught. You already know Tesla can't be happy about this. Elon Musk was sneak dissing Bill Gates on Twitter just because he bought one. The rise of the electric vehicle clash is coming. Shit, it might be here. While Tesla is for sure sitting comfortably in their throne, all these other big brands that all Americans love are coming. They're coming fast and they're coming quiet because we're electric, baby. Someone not threatened by anyone's success is our boy Tim Cook. Apple CEO was granted $40 million in stock recently. Shout out to the gay community, y'all doing it. He got over 300,000 in restricted stock units. They estimate that now he has about $100 million in their stock and could get another $115 million dumped in by the end of 2025 if he meets incentives. Ball, baby, ball. That's all I have to say. Always cash out from these corporate companies because they don't give a fuck about you once you're gone. Look at every CEO who's been dropped in the past. Dennis Mullberg used to be getting glowing reviews from Boeing. 2 planes later, they dropped him from the sky. They sent their CEO and executive board chairman free falling with no golden parachute. Well, I mean, it was silver, but it definitely could have been gold. And that's why I want all my fans and listeners to cash out. Don't expect your 9 to 5 to be your golden parachute. Let that Robinhood app be your golden parachute. Peace, fam.